Alright guys, welcome back to another video. In this video, we'll be going over the most frequently asked question that I have, and that is how to trade this indicator. And this candle has one purpose, and that purpose is to show me what the higher time frame is looking like, even when I'm on the lower time frame. Right now, I'm on the 5 minute, and you can clearly see this is the 4 hour candle. And I can also add other options like the daily candle, which I can do right here, where it shows me the daily or the hourly or whatever I want to see on the lower time frame. And this gives you a good reminder of where price is, where the manipulation is, especially for that 4 hour 10 a.m. power of 3 that we trade, right? So on this example right here, you can clearly see that the 10 a.m. 4 hour candle opened up right here. It manipulated into this 5 minute gap and then continued higher, creating that open, that slight manipulation into that 5 minute gap, and then reversing, creating that open, low, high, and close. And the same thing is for the daily. If you want to look at the daily power of 3, we have this opening right here. We manipulate and then create the high, and you can clearly see we have the close right there. But we typically focus on the 4 hour candle rather than the daily candle because we trade intraday during the New York AM session. But before we actually get into using this indicator in my strategy, let me actually tell you guys what that indicator is. So pretty much go to your indicators tab, search up higher time frame candles by Fadi, and it'll be this one. And make sure you have the 4 hour candle selected, and these are all the settings that I use. This is the color, and I use black for this one. And how I use this indicator paired with my 10 a.m. AMD model is very simple. I pretty much trade candle body dynamics. Now, what are candle body dynamics? As we know, every single candle has four things: an opening price, a low, a high, and then a close, right? And that on the lower time frame looks like something like this, where we have that opening price right here, accumulation usually. Then we manipulate, creating this low of that candle. And then because it is a green body, we have that reversal and then that closure in this time span. So if this was a 4 hour candle, it would take 4 hours to do all of this. And this is what the candle then looks like. So I'll just clean this up real quick. And this is what it usually looks like, where we have that accumulation. Then we manipulate, creating this low of that candle. And then we reverse and distribute. And now how do I enter? I pretty much enter off the change in the state of delivery above the last series of down close candles that actually created that manipulation wick, right? So we can clearly see we get a strong, significant candle body closure off this leg right here. We want a retest into this change in the steady delivery zone, and that's where we enter, trading the whole body of that 10 a.m. candle. So I'll show you a couple of examples right here, and as you can clearly see on the hard time frame, we are bullish due to many factors of respecting bullish PD arrays, disrespecting bearish PD arrays, having a higher time frame drawn liquidity above, and wanting price to continue higher. So at this point, we're on the 5 minute chart here, and all I'd be looking for is either a 15 minute fair value gap getting engaged or a 5 minute fair value gap getting engaged. Now, usually the 10 a.m. AMD model taps into a 5 or 15 minute gap, but in some cases, we might just tap into a 1 minute gap or tap into some relative equal lows or sweeping some low resistant liquidity, and that's completely fine. You have to adapt to the markets and not to only trade this model mechanically, and to understand your drawn liquidities rather than trading a step-by-step pattern every single time. So my drawn liquidity is higher, and I anticipate a manipulation in this area wherever price has a possible area to reverse. So we can clearly see on the higher time frame, we don't have any 15 minute fair value gaps. The next time frame is the 5 minute. So once I see on the 5 minute time frame, I have this nice 5 minute fair value gap. And because I have a bullish bias, I want price to tap in this gap, respect it, and continue higher, and also tap in this 5 minute change in the steady delivery. And that's pretty much respecting bullish PD arrays, which is also bullish institutional order flow, right? So pretty much I want to pair all these things with the 10 a.m. AMD model and trade it discretionarily rather than a step by step by step. So we can clearly just skip forward here. You can clearly see we tap in that 5 minute gap. And on the lower time frame, I'd be looking for a significant change in the steady delivery above the last series of down close candles that tapped in that gap. So this would be our 1 minute change in the steady delivery right here, which we actually get a candle body closure off that. So we would take our position, keep our stop loss at that swing low, and target a nice 2R. And we can see how this strategy plays out. And I'm anticipating this 5 minute candle to just straight distribute. And you can clearly see we catch the whole body of that 10 a.m. AMD candle. So this is one example right here. Let's look at another one. Okay, so this is a very educational example I want to show you guys. A lot of people might have interpreted this wrong and might have taken an L on this day. I personally took a win on this day, and I'm using simple concepts like understanding where the drawn liquidity actually is. So pretty much the 10 a.m. candle opens up right here. We accumulate, we manipulate, and then we continue higher. Now, you might expect, right, price to just continue higher because we created this large wick. Now, the thing is, you have to understand and pair drawn liquidities with the 10 a.m. AMD model. So in this case, we have this large wick, but we don't have a significant confirmation on the lower time frame. So If we go to the hourly chart, we don't have any SMT at the low. We don't tap into any higher time frame PD array, and we have significant drawn liquidity resting below. So what does the 9 a.m. candle do? It also taps into this 1 hour gap over here, and we can go back down to the lower time frame. And what does price want to do here? So on the lower time frames, we have significant liquidity resting here. These ERLs all throughout London overnight, all these liquidities resting here. Let's just mark this out, and you can clearly see we have all this liquidity resting here. Now, my thought process was I was not confident enough to take a long off this area just because of how slow price is moving, as well as leaving all this engineered liquidity. If we had an SMT with these lows, which we didn't, right? ES also left a failure swing, and ES also had a unmitigated 1 hour fair value gap. I would have been very confident and would have taken this accumulation manipulation distribution higher. But because we left a failure swing and engineered more liquidity, right? I was waiting for price to sweep this external high and see, are we going to sweep this external high in reverse, or if we sweep that external high, get a significant push lower, and then we get a propulsion block, right, forming another change in the steady delivery above here, I'd look to take a long and expect price to continue pushing higher, respecting those institutional order flows, right? But because price did the opposite, my if then statement was then, if we fail to offer this change in the steady delivery or fail to continue higher and respect those bullish PD rays, I'd look to take a short all the way down to these drawn liquidities, and this should just be my manipulation wick. So you can clearly see literally off this candle, this is literally my exact entry. There was an SMT at these highs, this internal SMT, and pretty much that was a significant confirmation. I pretty much entered right off of here, kept my stop loss at that SMT protected high, and targeted these lows here. But you can clearly see how much this actually manipulated lower. So like, look at this, absolutely amazing. You could have caught over 30R trading the 10 AMD model here, right? And understanding those drawn liquidities paired with the 10 AMD model is absolutely amazing. And also, we also manipulated into a 5-minute or an hourly fair value gap, sorry, and had SMT internally, swept that previous 4-hour candles high, and then continued lower. So, I mean, this was an absolute beautiful example of, possibly catching, 38, 40R, and it just kept running, maybe 1,000 points, I'm pretty sure. So, around a 45R if you actually caught this and held it, right? So honestly amazing. So here's another really good example right here. The 10 a.m. 4-hour candle opens up. We barely have any manipulation there. And what do? We form a 15-minute fair value gap right here. So pretty much my thought process at this point is, of course, I'm very, very bearish. We have not met my drawn liquidity, right? This is my drawn liquidity, and that daily external range of liquidity is also my drawn liquidity. So I'm expecting price to continue. Price should not reverse, right, off this area because we don't have anything significant to reverse off. And the reason I say we can't reverse is because we have not met the sell side of the market maker model. And of course, I go over those advanced theories in my premium Discord. Just to go back to my AMD model, I use the drawn liquidity aspect to anticipate an accumulation, a manipulation, and then a distribution, attacking all these liquidities that we have to sweep before we can actually reverse. So we can go down to the lower time frame and wait for price to tap into that gap. You can clearly see we tap in that gap, and what do? Just bring this back. We pretty much accumulate right at this area right here, and then we manipulate into that 15-minute gap, and we see an immediate reaction, as you guys clearly saw. And what do we see? We want to see a change in the steady delivery below here because that's the last series of down close candles that actually tap in that 15-minute gap. So pretty much we would keep our stop losses at protected high and target a nice 2R or even those drawn liquidities resting below. But in this example, I just target a 2R, and pretty much all we're just going to be is just be patient, right? In real time, we're just going to be waiting. We know what we want to see. We have a plan, right? We see that accumulation manipulation, and the only way we enter, we don't get jittery or anything. We wait for that change in the steady delivery, and if that happens, that's when we enter. So we get that change in the steady delivery. In some cases, you can market order. So in this case, I do remember market ordering, or I think I might have entered a little early, but I do remember catching this trade, kept my stop loss above this candle's high, was not expecting price to reach all the way here, and target a nice 2R. And of course, we left that failure swing along with this, so this is an equal low. And you can clearly see this, absolutely erupts, and we continue even lower down to that daily external range of liquidity that we sweep out later on. Yeah, so we just swept that out. So, it's as simple as that, right? We're always entering on the manipulation wick of that 4-hour candle and catching the whole body, and that's the whole premise of this 10 AMD model, right? If you want to learn this model in depth and also learn the daily bias and of course drawn liquidities concept that I actually pair with this, I genuinely believe that's like the most important thing a trader can actually do is understanding where the logic is in the market, right? And understanding why price has to go where. And we use the 10 a.m. AMD model as that framework and the perfect entry trigger, especially for New York AM session. So if you actually want to learn that in depth, you can join my premium Discord. It's going to be the first link in the bio. I'll see you guys next time.